One of the tax strategies we talk about is short-term rental tax loophole. The average rent for your short-term rental, Airbnb, whatever, is average stay is less than 7 days. And as a material participate, your short-term rental, meaning you are putting in more hours than anybody else, at least 100 hours or more based on the IRS rules. Material participation means you have to get your hands dirty, you have to self-manage, you have to do all the real estate activities, just like running a business. The material participation rule is very stringent, okay? So if you hire a professional property manager to manage your short-term rental, you are not materially participating. Short-term tax loophole, I hate to use this, the word loophole is not really a loophole. It's a legal tax strategy. If used correctly, you can achieve massive amount of profits, not only short-term cash flow and all that, but tremendous tax benefit, because short-term tax loophole give you a special tax write-off that a long-term passive investors may not get. Short-term rental is an active business. You are in the hospitality business. It's just like running a real business, a brick and mortar, running like a retail store, running a hotel. You are getting down and dirty, because short-term rental by IRS definition is an active business. It's no longer passive rental real estate. So my long-term properties, your long-term properties are managed by property managers. By IRS definition, we are a passive investor. We get some limited write-off. Our passive losses cannot exceed our passive income. That's a limitation. But anyway, filing tax return as a short-term rental landlord, you can file your tax return on Schedule E, which is typical, but you can also create some LLC or S corporation with respect to your short-term rental. So those are rules. The short-term rental loophole is a way to reduce taxes from your W-2 income without having to qualify as a real estate professional reps status, which you and I will talk about it later on this presentation. It works like this. You save enough down payment, you buy whatever short-term rental property somewhere in the US, then you convert it into Airbnb, variable, whatever. Make sure the average stay is 7 days or less. And you have to material participate. Usually you're going to self-manage.
Right.
You have to understand this. Do you have the mindset and the skill set to run a hotel business?
Right.
Are you willing to spend a lot of time, extra time? You know, if you have a regular full-time job, 40 hours a week, W-2, if your property is located out of state or long distance, 1,000 miles away, you have to question yourself whether you want to become a
serial participant.
Yeah. So each investor, they have to ask themselves, what is their skill set? Are they willing to get down and dirty, blood and sweat and tear, get the tax benefit, the short-term rental tax benefit for the sake of that, and spend the effort personally? Given my stage of my investing career, I'm not going to go back. I'm not going to get down and dirty to self-manage. That's too much work.
It is a lot of work. It's a lot of work. And I always think about when that plumbing breaks at 3 a.m, they'll be calling you. There are definite tax benefits to doing that, but just understand it's really your time is not your own, because you're really at the mercy of whatever tenant is participating for that 7 days or less. Yeah,
exactly. Yeah, but for those people that have the mindset, have the skill set, or willing to do it, willing to put in the effort, even though they have a full-time job or whatever, by all means, persons have a different skill set, a different buy box, if you will, right? The word buy box, there's so many ways to make money in real estate. So you have to find your niche. You have to find something you feel good about, something you have the skill set. It all depends, right? So anyway, so if you're able to do a short-term tax loophole, you can do cost segregation, you can do bonus depreciation on top of all the paper losses, passive losses from your short-term rental. You can also you can create large paper depreciation deductions. You can offset those deductions against active income, bypass the passive activity rules. Imagine if you have a fairly high income, if you have mid six-figure in W-2 income, you have a top federal marginal tax rate and high state tax rate on top of that. Imagine if you could do a short-term rental tax loophole and get the bonus depreciation segregation on top and depreciation everything in a current year, if you're able to buy more than one short-term rental, whatever,